Thank you and good morning. So it's my great pleasure to engage the discussion with previous chairs, just so that we've got some sort of history of what has happened over the last 10 years. And I want to start, Eila, with you on the basis that you were our first leader of the principles and have been a beacon of sustainable finance now for longer than the principles have been going. And I wonder if you could speak a little bit about the start of the green bond market and its move towards the principles and then a collective body, because it came on quite a bit from that point. And so what you saw, both the genesis of the market being, but also a bit about how quickly it developed once we all got together, because I think Nick's point about convening power is a particularly apt one.
Thank you. Thank you, Isabelle, for that introduction, which also tells that I'm not a spring chicken anymore. So none of us are. That's why I'm here. Yes, thank you. It was indeed, I think, for the first 5 or 6 years since the idea of a green bond or a use of proceeds bond, to be maybe more exact, was developed. It was pretty much a multilateral bank exclusivity, and volumes remained fairly small. And until, while that was the case, I think there was fairly little sort of reason to make such an effort as we have today, because we all had the benefit of the doubt of the market that, okay, these are the good guys, and we'll trust them to do the right thing. And then in 2013, we started to see larger sized issues. I think your previous employer was one of the first one to break the billion mark. We also started to see different kind of issuers like corporates, municipalities, and so on. And it was quite palpable in the air that this is now something that will start to grow and which is of interest to investors and which is then, of course, interest for issuers alike. And then when you have these two, you also have the banks who are interested, obviously. Some of a small number of these banks who were active in this market, then I don't know exactly how they started because I'm not familiar with that that part of the story, but they sat down together and they said that this is a market which starts to grow. We have different kind of people coming to it, and maybe we should have some sort of best practices, quite simply. And they had been already writing a paper together, the first ever version of Green Bond Principles, because Green Bond was the only thing that we discussed at that time. And one of these bankers then, Tanguy Claquin from Crédit Agricole then, he called me and he said, we have been working on this kind of thing. Do you think EIB would be interested in joining? And I said, well, of course, yes. And they had obviously made similar calls to all the usual suspects as well. And that's how we started the work. And I think everybody was really enthusiastic about this thing. Some of the first meetings were maybe even chaotic because everybody wanted to have their say. But I think this is the background that people started to see that now we have a new product which is taken on, which is getting larger volumes, more sort of audience from both sides, both buy and sell side, and that it would be good to have a little bit of some order. And I think that was a great idea, because I don't think this market would have developed quite this well had there not been some sort of discipline in how to do things. I think that was absolutely essential for the development of the market, now with the hindsight.
And I think when we started to see the executive committee, or even the secretariat, ICMA as the secretariat, come on board and say what would be good would be to have the 3 main parts of the market. So issuers, investors, and underwriting banks, who will form the main part, and then an ecosystem around it, including, law firms and stock exchanges and rating agencies and others, that really help to develop things. And I don't know, Lars, you were the next chair of the executive committee. What did you feel were the main impetuses of growth?
Well, I took over, I think, in 2018, maybe spring. And at that time, remember, the EU has just delivered the 10 action points for sustainable finance, including the suggestion for a taxonomy and also a green bond standard. You know, we were still discussing green. Of course, we had the green, the social, and the sustainability, but it was still use of proceeds. And I remember also even, you know, sovereigns coming to the market and OPEX part of the discussions, and it was almost, oh, we only do green, so, or social, and it needs to be use of proceeds and all that. And that also triggered somehow 4 years later after the first green bond principles that maybe we should have a discussion around a strategy paper. So actually in my term, together with the executive committee and the other steering group members, we started working on that paper. And that in that paper, actually, there was a section called the mission and vision, or vision and mission. And in 2000 and late 2018, beginning of 2019, that was only containing the word use of proceeds and the 4 core principles. And you know, that was how we sort of was seeing ourselves at that time. But then, do you remember what happened in the summer 2019 and also in September 2019? Well, AXA Investment Management produced a paper called the Transition Bond, I think called Guidelines. And here we go. All of a sudden, the market was sort of maybe taking another direction compared to what we were talking about, the core use of proceeds. And then in the September, Enel issued the very first performance-linked bond. And that was sort of, wow, here we go, what are we supposed to do? And up to that meeting, we had a physical meeting in Washington. I remember, and for some reason, we were able to gather almost all ExCo members, and we were sitting around the table, I think it was with the IFC. And before that meeting, we actually wrote out to all executive members, so 24 institutions, and we had 2 sections. Option one, do you think the principle should work with only use of proceeds and focus on that? Or should we actually allow ourselves to have a broader view and sort of featuring social and environmental objectives? And that was the discussion. And you know, we asked all members to put their views in writing. So we had that up front to that meeting in October 2019. And do you know what the stance was before that meeting? It was a draw. There was 12 for staying at the green, and there was 12, let's maybe relax the wording a little bit and also have the ability to look a little bit further ahead. I remember that, you know, sometimes the discussions can be quite heavy in the executive committee, and we went into that meeting. It was almost sort of a new Pope situation, in the sense that we had to see white smoke coming out and somehow find an agreement, because this was actually crucial, because, you know, what we're supposed to do going forward, and you most likely, you know the outcome, but there was a hefty discussion around this, and we were able to find a good compromise. And here we go. Right after, we had the transition finance working group, or task force, I think maybe it was first, and then followed by the sustainability linked bond working group as well. So that for me, that meeting in October 2019 is what I remember most from my chair.
Thank you for those memories. And it brings back even earlier ones about when we had the green bond principles, and then we had the social bond guidelines, and we had a big discussion. as to whether we should have social bond principles or whether to combine the green and the social together, and how to think about that. And I was on the losing side of that particular one. Obviously a deeply painful memory, and this is not supposed to be a sort of, trauma counseling group therapy session at all. So the focus on that was because people felt that there were very separate portfolios of green and social. And we'd see it reflected sometimes in impact reporting working group and other things, where if you wanted to introduce some social metrics as other sustainability indicators, there was a concern that this was sort of watering down the green bond principles, as though these two things are totally distinct. And I think, Denise, a lot of your work, both as chair but even before, where you were heading the social bond working group, was very much focused on driving up the social and the focus on social, culminating with a particular driver by COVID. So I wonder if you could talk a little bit about that.
Yeah, I mean, I had the most fun time, given that I was chairing during COVID, of course. I will say, before I answer that, how amazing it is to be here. It's like being at a high school reunion, in a sense, where, everyone turns up and everyone's hale and healthy, etc. 10 years to me is really incredible, because I remember the first meeting. I don't know if we were even an ExCom at the time, which we hosted when I was at IFC in Washington, D.C. And I was thinking last night, because I obviously hadn't prepped anything to say today, but I read the first press release, and if you don't mind, I will share what it said. This was in 2013, when a consortium, so January 2014, it says a consortium of 13 investment banks today announced their support of the Green Bond Principles. Then it goes on to say the principles build on first-to-market issuances by multilaterals and provide a platform for other future bond issuers to direct funding. And I think it's quite amazing, because when the principles were put together, it really was for non-DFIs, essentially. And when you think about the role of DFIs, it's promoting the private sector. And I sit here today as an ambassador straddling both, right? Having obviously being at IFC for the best part of my career, and now, on the corporate side, and seeing the success of the work that we've all done. And I'm incredibly proud of that. And starting again from that first benchmark trade, but this here, all of us here today in Amsterdam 10 years later, is in effect what I would say a success story. So all the things you said, right? It's from pilot to scale. Shocking to hear Nicholas say over 4 trillion. Amazing. From 10 billion in 2013. It was nothing. On the social bond side, just coming back to that, this was an area that, of course, as you mentioned, I took much to heart, and a lot of the complementary guidance as well. And I still very much believe in this product, and thinking that where we're going, given we've done so much education on green and we are thriving off that, we ought to be doing that for everything else and having this systems view, which I think has been missing. In all of that, I will end by saying that it is such, when you think of all the financial products that have been engineered in the last 15, 20 years, crypto, whatever else there is, ours, I would say, is one that you can understand and has really gone from pilot to scale, and shows the power of collaboration, education, and transformation.
Thank you. And Eila, I wonder, because you straddle both the sort of European perspective as well as the internationalist perspective as focused on by the Green Bond Principles. The Green Bond Principles, or the principles more generally, doesn't tell you what is green enough. That's been the position. Let's focus on transparency, so that if you're putting out information and you're given guidance as to what information to put out, others can then determine what is relevant for them. And Europe has taken a rather different view through the EU taxonomy, where it's been saying, we need to tell you what is green enough, so that concerns about greenwashing are then excluded. And I wonder if you could speak to the strength of taking a sort of principles-based approach, this focus on disclosure and transparency, and how you see it playing out in terms of really creating the growth in this market.
Yes, to me, all of these, they are quite sort of compatible. And and indeed in the green bond principles or the principles, we always said that we are finance people, we are not the ones who decide what is green or sufficiently green, and that is best left to other people. Then there were people who took this task on board, and we have the EU Green Bond Standard, which is not in force yet, and it's a voluntary one. But it kind of plugs in the two areas where there were sort of most not complaints, but wishes to go further, i.e. who would decide what is green, which is then the EU taxonomy provides that, but not only. We have we have the Chinese green finance catalog, we have taxonomies in Colombia, in South Africa, in Mexico, so you can plug in whichever you want, basically. So that is one part, and the other part was about the external reviewers, where we did in the ExCom did some best practices also for them, and the EU went even wider, proposing a accreditation system, which is still to be created. So, but I think the principle that we took from the beginning with the principles and the green bond principles was that you provide the transparency, what you do with the money, and your investors can decide whether they want it or not. And I think this has worked extremely well, because people talk about greenwashing a lot, and I think it's sometimes like the Loch Ness monster. Everybody talks about it, but nobody has really seen it. I have seen it, but I have not really seen it in the green bond world. There have been maybe some bonds which are less than perfect, but even they are transparent. You can choose not to buy because you don't like it. You know what it is. Whereas if you look at the sort of general communication where it's weird, like a general sort of ESG views on companies. I mean, just a couple of weeks ago, there was the Forbes magazine who put Philip Morris as the #1 sort of net zero, whatever. So, okay, I can see plenty of greenwashing going around, but it is not really in the bond market, it is somewhere else. So I think it has been very, to me, it's totally compatible in the way that green bond principles is kind of it's also the structure on which the EU Green Bond Standard was created. I mean, we were there with ICMA people doing this proposal, and some of it we hit it right, or we got what we wanted, some of the others we didn't. But it is exactly on the same structure, which is you tell what you do, and then your investors can choose. So I think the idea of transparency has been good, because if we think that there had been no such work, we would have had much more of those criticized green bond issues in the market, and people would have said, this is just a mess, because everybody and anybody can say that this is green just because they bought some more green plants in their offices or something. So I think it has created a lot of self-discipline in the market, which is why, like I said in the during the first question, that I don't think this market could have grown this much and become this successful had there not been some agreed sort of rules of the game, how to do it.
And that's without bylaws.
This was an inside joke, sorry, yes.
And Lars, you've now moved from being an issuer. In fact, most of you have moved from being issuers. Some of us are a bit stuck, still being on the issuance side. And as an underwriter, what do you see as being the real developments that we're seeing in the market, and the strength that the principles brings to sustainable finance when you're working with clients or speaking to investors or working with issuers?
Well, first of all, it gives some good guidance, and exactly it's a process description for issuers to prepare that transparency for the investors. And I can only fully agree with Eila that if we have walked down the route and trying to define green, I think that would have killed the whole thing. So it has been very, very crucial to stay away. Well, someone of course needs to define the green, but that is clearly not our purpose, and that's still the thing today. Of course now, as mentioned, we have other taxonomies and other definitions that is coming into play, and that of course makes it for somewhat easier. But still, the principal discussion, or the principles actually, is the foundation for the discussions with issuers today, and that goes for new frameworks, but also for updates, etc. And it's think about it. These are 10 years old, and it's basically the same thing. So there is a super good foundation, in my view, and still something that that is the main, discussions and principles that we use. And I know the EU Green Bond Standards is coming, and in many ways, maybe a little bit same, but I think we will see a couple of years before that standard to be sort of used more widely. So therefore, there's still room for the principles to be used in going forward, no doubt, in the future. Yeah.
And one thing which I have thought, obviously you can't prove the non-existence of something, but I think maybe the fact that we did not have those rules because we could not have those rules, what is green or green enough, it made maybe this market a bit to focus on the areas which are the safest, i.e. green energy, which very few people would say is not green, or sustainable transport, or maybe energy efficiency of buildings, which are of course the big capex areas anyways, but it would be nice to see a green bond which is focused on circular economy, for example, or some of the plastic pollution, which I don't know if the lack of standards has been the thing that has held it back, but it may be one of the reasons. But hopefully we get the whole scope of what we need in the green and environmental space, and social as well.
That didn't stop many of these very, very intense debates we had at the ExCom. And I remember once when we were talking about project categories, and Eila said, "What are we talking about here? Would a horse-drawn carriage be described as a green transport?" I don't know if you remember that. But we all had very, very active debates about this.
I must say, I do miss Eila's analogies, because they always sort of stick in the mind. Lars, I just wanted to see whether your observation when you're talking to clients is that they're held back, because I was, with Brian's plateauing, and in terms of finance, how much is the concern about reputational risk, in your view, holding people back from coming because of too much talk of greenwashing, not quite the Loch Ness Monster, but, some concern?
Well, there's no doubt that the requirements for entering into the green bond market, being green use of proceeds or the performance linked, I think for good has enhanced over the years. And that, of course, always triggered the discussion, is the issue ready to be able to deliver the transparency, and also to be able to deliver a prudent either use of proceeds or some prudent KPIs and targets that allows you actually to enter the market with a positive response. And by the way, at least I think so far this year it looks super good. I think for the first 5 months of the year we are well ahead, and potentially on a good path to see a record year for green and sustainability linked social and sustainability bonds. So all good. So hopefully we are on the right track. But there's no doubt that we see, and maybe that is mainly in the sustainability or in the performance linked bonds, people hesitating, and hesitating in the sense that, of course, you don't want to, walk into this and then with the wrong outcome, being blamed for, well, that was the wrong KPIs, and by the way, the target's not good enough, and well, that step up didn't provide enough, protection, and that discussion is still around, and we do see that that issuers are hesitating. Now, one thing, in my view, that we might need to discuss, and that is where does these sustainability-linked bonds actually belong? And now, I think we have, camped them in many ways in the green part, but maybe they belong in the transition portfolios. And I recently also saw, was it last week, ESMA produced their new, was it guidelines or recommendations for updates of the SFDR? So they are now talking about sustainability products, but also transition products. And I think maybe that's what we need. We need a camp where we can actually put transition, because I think what we are afraid of is, of course, well, what are you doing? This is not green. But that's the whole purpose. But of course, investors don't want to be blamed for investing in something that is not green, and they have been lacking maybe a room or a portfolio or whatever to camp it, and we have all been trying to find that definition. In my view, maybe that's what we need. We need to recognize issuers using the performance-linked as a journey towards being in a better place. And that's exactly the transition. So that's I think, some of the discussions that we are having with issuers and, of course, also investors.
I think one of the difficulties is, and we've had this discussion, including when we first had discussions around the handbook, is that when you look at the green bond principles and what they talk about is that in order to qualify under the green bond principles, apart from aligning with the 4 core principles, and ideally quite a lot of the recommendations as well, you've got to talk about robust impact, so sustainability impact. And the trouble is, where are you going to then cut this off and say, well, this is transition and this isn't green, if you're not talking about it? It's got to be a transition to something. And if you're putting green bonds in the context of the overarching strategy, that necessarily it's going to be on that journey. So it becomes very difficult if you start sort of subdividing, and it may make them sort of less credible. And then you've got the EU taxonomy, where things can come under the EU green bond standards that are, again, on that journey. So it will become really messy. I don't know, Denise, you want to?
No, I want to give the view beyond the SSA space, right? Because I'm now in the seat that sees the trickle-down effect. I am the client now in that sense. That is not, a AAA super. And I speak on behalf of my 46 portfolio companies, and every CEO has, first and foremost, front of their mind is the fear of greenwashing, well, let's just say they're on the cusp of being green-hushed, right? And the role here of the underwriter is critical to that, right? And let's be fair, this whole journey started with those 4 banks that came together, because you need that, right? To be able to give the confidence to the client to say, well, there is this is best practice, and let's follow this. Your reputation's at stake, so is theirs, and so are the investors, right? And so to itself, I think we continue to be on this continuum of education, which has been a benefit of the principles, but none of us know it all, right? And the vast area that it covers, you gave the example of Philip Morris. They may be doing great and under the S, maybe under the G. Who knows? One aspect of the S, certainly not, right? And this is the in itself conundrum of what we're trying to achieve. I will say that the principles, though, definitely is at least the 101 we all have as a standard, which was what the initial plan was. I think we were asked to check for questions, by the way. I was given the responsibility of the iPad.
Oh, yes, but Ella wanted to say something.
Yes, on the transition, because that is the hot potato. And I think there the risk of and fear of greenwashing is very high, because there are even less rules there but in the green space, because it cannot be, I think everybody in this room probably would agree that if an oil company cuts down Scope 1 emissions, that's not really transition that we're talking about. But that's about the only thing. Then going beyond that, we have very diverging opinions. And I had to smile to myself a few weeks ago. Even Financial Times was writing that in this sustainability-linked space, we do need more regulation. And I said, oh.
This is an example of how the market moved way ahead of policy, right? Yeah.
But maybe, if we could, and I think actually this is super difficult, but maybe we need to use more time on trying to, what does transition actually mean, and avoiding lock-in effects and all the things that, making sure that we're on the right path. And if we could find guidance or good definitions, that would give the comfort. Yes, of course, this is not greenwashing. It's my journey. But it is the problem that, you're out there and then, what are you doing? This is not green. No.
But transition, by the way, should not only refer to green. I mean, we're talking about a future economy.
That's
that
the thing.
everything, the real economy needs to change drastically. And I suppose we always do start with green, but it really ought to refer to the wider universe.
And I would point out, sorry, our time is up, sadly, but I wasn't looking in the right place, but the Climate Finance Transition Handbook does actually provide very robust guidance. I think if one is following that, then it would be very hard to be accused of greenwashing. So I think there would be a very robust defense.
Just one point to that. I think that maybe this is one of the few things where it has a marketing problem. I mean, we did the handbook during the time I was chair, but I think the word transition in itself just scares people. And there are a couple of other terms that I think within our universe that do that. And maybe it is a question of thinking about a different term. I don't know, transformation, something else that CFOs may smile at.
Well, if it's still T, it helps for all acronyms. But I'm so sorry that our time is up without seeking any questions. So my apologies, but we are all around today and very much look forward to engaging with you. And it remains for me to thank Eila, Lars, and Denise for their wonderful leadership that they gave the principals for most of the last decade. So thank you very much.
And to Isabelle.
Thank you. And you, Isabelle. And ICMA.